All right, we've been talking about cash flow, and today what I want to talk about, this is my same illustration. By the way, I can't write worth a flip, so I took this high definition a picture of what I did on the whiteboard behind me. Shouldn't even be allowed to hold a marker, but this is kind of video 2 about cash is king. We talked about defining the cash cycle last time. We talked about understanding our position in terms of accounts receivable and accounts payable. Today I want to look at that next one on the left-hand side of your screen, working capital, WC. What is working capital? Imagine that you were going to invest in the market and you got a Scottrade or Fidelity or one of these easy online trading accounts. Any cash that's available in that account for you to invest in making money could be considered working capital. So in your business, think about it this way. Any capital, any cash that's in your business that hasn't been spoken for immediately. The actual definition of working capital is they take a measure of current assets, so kind of cash, liquidity, and they subtract that current liabilities, the credit card payments and the sales tax payments and things that are going to be due right away. And what's left, those current assets minus current liabilities, is going to be the available unspoken for capital, which is called working capital. The reason this is so important, and the reason I have it across the crown here from debt, is that having too much short-term debt, or another way to say this is to not have any working capital, not have enough cash to really even cover your current liabilities. This is a recipe for disaster in any business, and especially in an inventory-based business. Your business is not capitalized enough. You're undercapitalized if you can't come up with a valid calculation for working capital. And here's what I mean by this. In an inventory business, your cash cycle, which we talked about last week, is long enough that you just got to be really careful because you're going to place these big orders in inventory. You're going to be waiting sometimes months. Inventory comes in, you can finally sell it. But your accounts payable are going to come due on that inventory. And so you might end up in a negative cash position. And what I mean by this is you have $10,000 in the bank, but you owe $20,000 in immediate debt. That's a recipe for what's called a high stress cash, right? That's anxiety. You need an asset for that. That tells me that your business is undercapitalized. And if you could be proactive to restructure your debt and increase that working capital by either having some additional investment into the business or finding other ways, which we'll talk about how to use profitability and lowering overhead, how you can use those two levers to increase cash flow. We'll do that next week. But I want to start having you think about your business in terms of it's got to have some liquidity in it. There has to be some free cash. I have to have some kind of working capital in the business. If I don't, I'm going to constantly feel stressed about cash flow, and I'm going to be constantly stressed about how I'm going to make my debt payments. Take care, guys. Talk to you next week.